I'm going to share this one change that I've made in my trading in the past month that's increased my win rate from 40 to over 70% when it comes to trading ICT concepts. As well as I'm going to be breaking down this Dow Jones trade that we took this morning, which netted us a little over 3R, which I did share on my Instagram at Arkhamtrades. So make sure you guys are following me there if you haven't already. When framing a bias inside the marketplace, our narrative should stem from the higher time frames. We're looking at the weekly time frame here, and we have this bearish fair value gap, which we did reach up into the prior week before then giving this doji formation. And then coming into the marketplace this week, I did forecast that we wanted to see lower prices. I did initially want to see us reach up into the 50 and 75% level of this long wick. We got close, but not necessarily at that 50 or 75% following that massive move to the downside. Let's go down to a daily time frame and frame our narrative from there. So coming down to the daily time frame here, we can identify that we have taken out the previous daily lows, as well as we have taken out the previous weekly lows as well. We can for sure identify that we have swept sell side liquidity, so that's going to be a really good confluence for me if I'm going to then anticipate longs. As well as we can identify that we are inside of a daily rejection block. From this lowest body on the daily to this lowest wick, this separation from the body to the wick, this is our rejection block. This is a higher time frame support level. So as we reach down into this level on the lower time frames, if I can see a break to the upside, I would then anticipate longs inside the marketplace, reaching back up into this prior day candle. As you can see, we opened up and immediately dropped to the downside, dropping over 600 points the prior day. So I want to see the marketplace reach back up into this down close candle to at least retrace back up into that level before the continuation to the downside. Coming down to the H4 time frame here, apart from that sell side liquidity as well as the daily rejection block, we do have this H4 bounce price range. After this massive shift to the downside, we immediately reversed higher, leaving this separation between this high and this low, creating this bounce price range. And as we came down into that level, near that 25% level, the market did see a reaction leaving it. This is a very good signature that we want to look for as we're anticipating higher prices inside of this higher time frame bullish area. We do have these inefficiencies above us with this bearish fair value gap as well as the bearish fair value gap all the way up here. And if we extend our dealing range from high to low, you can clearly see that these bearish fair value gaps are inside of a premium. So if we're anticipating a retracement inside of the marketplace, we'd at least want to see the market reach up into that 50% level to then reach up into these premium bearish inefficiencies to then fill these bearish inefficiencies for then retracing and seeing that continuation to the downside. Remember, the marketplace is a series of expansions and corrections. From expansion to correction to expansion to correction, this is how market structure is then formed. So as I'm coming into the marketplace, I understand that the state that we're in inside the marketplace is a correction. So if I can get some type of lower time frame signatures indicating that we want to go higher and order flow is seeking higher prices, I want to then take that trade. Coming down into the H1 time frame, we can clearly identify that we're inside of this H1 breaker. We had this low, high, lower low. So as we break above this high now becomes a support level to then propulse us to the upside, as well as we do have this inversion fair value gap. So as you can see, we closed above that bearish fair value gap with a body close, and as we come back down into that fair value gap, it is now a support level to then propulse us higher, as well as we do have an immediate rebalance. So as you can see here, from this 1 hour high to this 1 hour low, we opened up, came lower, then immediately left it. This is a very, very bullish signature that you want to look for, especially on a higher time frame like the 1 hour, 4 hour, and daily and weekly time frames. These are very, very good signatures inside the marketplace that you want to look for. This is called an immediately rebalance. And soon after creating that immediate rebalance, we should expect strong momentum to enter the marketplace to go in the direction of our drawn liquidity, which is back inside this bearish order block here on the 1 hour, and even back above these fair value gaps and inefficiencies inside of this premium dealing range. Coming down to a 30-minute time frame here, we did have news around that market opening at 9:30, So we were patient, waited for news to come out before we struck. And this is where I get into the one secret that I've changed in my trading that's overall improved my win rate. So the one change that I've made inside of my trading that's overall improved my win rate was trading on the 15-minute time frame. So the reasoning for trading on the 15-minute time frame is through backtesting and through studies. I've realized during the time that I do trade from 9:30 to around 11, there is at least one good opportunity on the 15-minute time frame. And as we know, as traders, less is more. It's not about taking more trades or being at the charts more, but it's actually the opposite and being at the charts less and choosing higher probability setups. There is at least one high probability setup every single New York session on that 15-minute time frame. So my way of trading has now structured from trading on the 5-minute and trying to choose one or two high probability setups is just trading on the 15-minute time frame and choosing that one high probability setup every single morning. And this one trade alone increased my win rate almost 2 times. So as we can see here, coming down to the 15-minute time frame, after doing our top-down analysis, we've realized, okay, the 1 hour had that immediate rebalance. That's very nice. We have this 1 hour breaker, okay, plus we're inside of this daily bullish rejection block, as well as we have taken out sell side liquidity. And now on the 15-minute time frame, we have this 15-minute bullish fair value gap. So what I did here, as price came down into this bullish fair value gap, I took my longs at the opening, stop loss below that bullish fair value gap here, targeting back above these highs. So this was a trade idea this morning, targeting back above these highs for a 2-to-1 R. Even though I do take my entries on the 15-minute, I do like to go down to the 5-minute time frames and look for opportunities to scale into my position and add more. So I'm gonna go down to the 5-minute time frame and I'm gonna go over why I scaled in where I scaled in. Coming down to the M5 time frame here, we can identify this bearish fair value gap, which has just now been broken, which we'll talk about later, and this bullish order block down here. So as this bearish fair value gap is now broken, I'm anticipating price action to come down into this inefficiency to then find support before we then reach back up into these highs. We do have this long wick on the 15-minute time frame. We're anticipating price to find support at these support levels to then fill in this long wick. So we're going to see what happens next and where I scale into my positions. So as we can see here, as we come down into this bullish order block as well as inversion fair value gap, I do scale into my position, bringing my stop loss back up into the entry, keeping the same take profit back above these highs. So scaling into my position offers me to have a higher R multiple. So instead of winning this trade and getting a 2.5 R, I now have an opportunity to make over 3 R on this trade simply because I identified that I'm on sides in the marketplace and I added to my winning position. It's important to add to your winning positions and make more for your wins. If you're going to win, why not make it big? If you're on sides and you're aligned with order flow, I understand I'm aligned with order flow, so I'm gonna make more on this trade because I'm in the right direction. Let's see what happens next. We then see this push to the upside near our take profit. And as you can see here, price does come up into our take profit, taking us out of the trade, making this trade a 3-to-1 R. Very, very solid. That's going to be it for the video, but if you guys are looking to join my private mentorship and get some benefits like trade live with me every single day, daily pre-market, post-market, and trade breakdowns, as well as beginner and advanced lessons shared nowhere else, plus a community of 100+ active traders, make sure you guys do join my Patreon, which is patreon.com/tradersasylum, or it's the first link in the description. I'm Arkham. Be safe.